I'm Brownfield commodity market reporter John Perkins with the closing market minute for Tuesday, August 19th. Soybeans and corn both ended the session lower, seeing some profit taking. Beans did pick up additional pressure from a lower move in soybean oil, and those losses in soybeans were despite the sale of 230,000 tons of new crop U.S. beans to Mexico ahead of the open. The dominant factor for both beans and corn continues to be development weather. That does look favorable in much of the region, but some areas are going to need some rainfall sometime soon. Wheat was mixed. Chicago and Kansas City were down. They are oversold and due for a bounce technically at this point, especially with September contracts both falling below that $5 a bushel mark, but they're both also contending with rising world supplies. Minneapolis was higher, even if the spring wheat harvest has caught up to the 5-year average. The trade is expecting more near-term delays in parts of the northern U.S. plains and the Canadian prairies. Live cattle were mostly higher and feeders were up, waiting for direct cash cattle business to get underway. Asking prices were at $240 on the live basis. Otherwise, the major feeding areas remained quiet. Widespread trade might end up waiting until after Friday's USDA cattle on feed report, which is going to be focused very closely on the placements. And hogs ended the session mixed, mostly lower on spread trade and questions about sustained domestic and export demand. On the domestic side of things, the pork carcass cutout value was lower at midday on Tuesday. On the export side of things, China remains a major question mark due to tariff tensions with the United States. With the closing market minute for Tuesday, August 19th, I'm Brownfield commodity market reporter John Perkins.